So I mentioned Oracle has seen a drastic price decline over 25.5% over the previous month, significantly underperforming the AI index. The biggest reason for Oracle, I should say, not Nvidia, is the company's balance sheet and the approximate debt it has to take on in order to fulfill a lot of those projects in artificial intelligence. If you look at the company's balance sheet, they have a significant amount of debt, and they're planning for another $38 billion in debt to build these data centers that are going to fulfill the demand that they're getting from large customers like OpenAI. Now, demand for their services is booming and revenue is growing. The remaining performance obligation backlog is increasing. All of that is significantly positive. But the question marks are, how will the company fund the expansions required to fulfill on these orders the company's received? Secondly, what are the profit margins on the orders that they're receiving? There were some rumors that the profit margins on these newer orders, on these big orders, are a lot smaller than the company's historic profit margins. The company perhaps is sacrificing profit margins to secure these longer term large deals from companies like OpenAI. And finally, how much debt will the company have to take on in order to serve these deals? The company already had one of the most leveraged balance sheets in the tech world, and now with these new investments needed to fund these categories, it could further hurt the company's balance sheet. I've calculated and I updated my intrinsic value per share calculation for Oracle at $293. The current market price is now down to $199. So the stock looks undervalued based on my proprietary discounted cash flow model. Now, when I go to fiscal.ai and I retrieve the forward PE and forward price to OCF at 28 and 21 respectively, the stock looks fairly valued. It doesn't look undervalued based on these metrics, given its revenue growth rate expectations at its profit margins and its returns on invested capital. Comprehensively, though, the stock looks undervalued because of how undervalued it looks, utilizing my proprietary discounted model. Furthermore, I like that the company has hundreds of billions of dollars in order backlog, and it's operating in an industry that's still in a supply-demand imbalance, with demand well ahead of supply. So all that being said, I will update and reiterate my buy recommendation or rating for Oracle stock.
Click the link below to watch the full video.